Good evening, everyone. So I'm going to be talking about something a little bit different, SpaceTech, and the investment opportunity that is represented through the Seraphim Space Investment Trust. So what is Seraphim's overarching objective? Might sound quite grandiose, but nonetheless, we are accelerating humanity's next giant leap by transforming science fiction into science fact. And I'm going to spend a little bit of time at the start of the presentation giving you hopefully a bit of a foundation in why we're so excited about the opportunities that are presented by space before coming on to tell you a little bit more about Seraphim ourselves and ultimately the investment trust. So I'm going to start with a very bold claim. We believe that SpaceTech represents an opportunity analogous in its impact and scale to that of artificial intelligence. There's been a huge amount of press coverage in the last couple of years about the emergence of generative AI and the impact that is going to have on a broad swathe of the global economy. Well, I'm here to tell you that our belief is that space is going to be of an equivalent scale of impact over the decades ahead. How much of the $100 trillion of global economy is going to be impacted by this? We believe most of it. How much of the global economy is going to go to space itself? Now, this might sound like science fiction, but it is already starting to happen. Everything from scientific breakthrough to power generation to the development of drugs, all of these things are now starting to move into orbit. And it's for these reasons that some of the world's most successful entrepreneurs, the likes of Elon Musk and Jeff Bezos of Amazon and Richard Branson, have been plowing very considerable amounts of their own wealth into developing their own space startups. So what's driving this opportunity? Well, fundamentally, what we've seen in the last decade, and we're now expecting to see increase in cadence, is a fundamental change in the economics of space. What's behind this? Two things. Number one, the cost of getting to space has come down already by more than one order of magnitude. So you've seen more than a 10x reduction in the cost of getting to space. Why is that? It's largely thanks to Elon Musk and SpaceX and the advent of reusable rockets that have dramatically reduced the cost whilst increasing the cadence of being able to get into space. Allied to that is the fact that 15, 20 years ago, satellites were the size of a bus and typically would cost about $1 billion. Today, the kind of companies that Seraphim are investing in are putting up satellites that are the size of a shoebox and cost tens of thousands of dollars. So what does these two things mean in combination? It means that for the first time ever, you are now able to put up constellations of hundreds and even thousands of satellites for the equivalent cost of what it would have been for just 2 or 3 satellites a decade ago. What does that mean? It means that you're able to blanket the Earth in connectivity and you're able to capture near real-time insights about every square meter on Earth. And we believe that that is a profound change that is going to unlock huge disruption. So why space? Why now? Well, firstly, because space makes the world go round. It's the hidden linchpin that powers much of the modern world and trillions of dollars of the global economy. You think about GPS, you think about sat-nav, you think about Uber and Google Maps. Those are just some of the obvious ways, but it's the invisible layer that powers everything from the financial transactions that we all do day to day. It's the timestamps from satellites that enable that. Through to communication, transportation, weather forecasting, which has got some room to improve, and many other facets. So space is already an intricate part of our lives today. Secondly, and I've already touched on this, space really is the next industrial revolution. We believe that the changes that I've just described have analogous potential to that of things like the PC revolution, cloud computing, and the smartphone before it. Third, the market is now at an inflection point. More than half of all of the satellites that have ever been launched have gone up in the last 5 years from a handful of companies, including some of our portfolio companies. And sat behind that, we now have hundreds of companies that are planning to put up hundreds of thousands of satellites over the rest of this decade. So we're talking about a 10-fold increase over the next handful of years in the number of things in orbit. And lastly, because space is a high-impact, multi-trillion-dollar opportunity, it's already a very large global industry worth about $500 billion that many people are predicting is going to become multi-trillion-dollar industry over the course of the next decade. And because space finds itself at the nexus of many of the megatrends that are powering our world, including artificial intelligence. So where is this disruption going to present itself? We believe virtually everywhere. So you can see here a range of terrestrial sectors in some of the ways that I've already touched on and others that I will allude to in some of the forthcoming slides, we believe that every single one of these sectors is going to have a tangible impact as a result of the changes that are happening in space right now. So what does this mean in terms of the investment opportunities that Seraphim Space Investment Trust is focused on? So one way we think about this is to segment the opportunity between the imaginatively named Space 2.0. So this is new space. This is putting up these constellations of very small shoebox-sized satellites. That's really where the bulk of our activity has been focused. It's analogous to developing a digital infrastructure in the sky, collecting data that is of a sort of Google-esque in its scale, whilst also potentially bringing billions of people online for the first time. What comes next is Space 3.0. This is really where, with all of these constellations going up, you're now seeing an entirely new industry developing in space for space. You've got satellite servicing. You've got people looking to do data centers and computing in space. You've got the internet in space and various telecommunication relay systems. And you've also, very excitingly from our perspective, got space as a scientific platform. What do I mean by that? The absence of gravity means that you can do things in space that you simply cannot do on Earth. So entirely new generations of drugs and materials are now being developed in space. Further out, and this is not an area that we're particularly active in right now, Space 4.0, which is really where the industry is heading. This is really about exploiting the infinite resources of space for benefit here on Earth. What do I mean? And as crazy as it sounds, believe me, there is golden opportunities around asteroid mining. We're running very low on rare earth materials that are powering geopolitics in many, many different ways. There are individual asteroids in space that, in theory, if you brought back all of those rare earth metals, would make everyone on Earth a billionaire before adjusting for the fallings in pricing. So, because of all of these changes, private investment in this sector has been skyrocketing. So you can see here the increase in private capital that's gone in. Every year, record on levels and number of deals being done. What does that mean in the context of the wider venture ecosystem? Well, you can see here a little bit of a complicated chart, but in essence, SpaceTech is massively outperforming general tech. You're seeing quarter-on-quarter growth in both the number of deals that get done and the amount of money that's being invested, in stark contrast to general tech that over the last couple of years has, as you can see here, flatlined. Why is that? It's partly because of the things that I've been talking about, but it's also about the secular tailwinds that are really powering the sector. Things like global security, which I'll come on and talk about, and the application of these kind of technologies for combating climate change. So, moving on to Seraphim, who are we? Well, put simply, we are the world's #1 space tech investor. We're pioneers in this sector. We launched the world's first venture fund focused on space a decade ago, which delivered a 3x return to our investors at nearly a 50% IRR. We've launched the world's first listed space fund. That's Seraphim Space Investment Trust that I'm here to talk about today. And we also have the world's first accelerator focused on space. So 100% of what we do is focused on space. We operate globally, and we operate at all stages from inception through to businesses becoming public. So what's our model? Really, what we aim to do is to engage with every single business around the world that is looking to develop space-related capabilities. We look to get involved at the very earliest stages with our accelerator, where we've now had 13 cohorts of 100 companies that have collectively raised over $500 million. We then look at the best of those to invest into our early-stage venture funds, and then ultimately the businesses that are on real inflection points towards becoming very sizable public companies. That's really the focus of the listed trust. An important element that I should mention about our model is that we have deep relationships with many of the leading industry protagonists. So you can see a number of logos on the page here. These are people that have sponsored our accelerator or invested in our funds. So we're talking about major players from the sector who we have privileged access to help support our due diligence and help catalyze and grow our best performing companies. So what's really the basis of our investment strategy? Ultimately, we believe we've developed a compelling flywheel. So over the last decade, because we've had first mover advantage in this global market, we've been able to build a very deep network that covers every facet of the space sector. More than 20,000 senior industry executives and 5,000 startups that we've engaged with in that time. What does that translate to? It translates to us receiving a vast majority of the global deal flow. So we've been able to ascertain that we see more than 3/4 of all of the deals that happen around the world at every single round. What does that provide us with? It provides us with information asymmetry. We're able to get privileged insights into the latest trends that are happening to then identify the businesses and the management teams that we believe are best aligned with the opportunities, which we then play back into the market through thought leadership that we do to drive our network. So I've touched on some of this already, but what are some of the key themes that the trust offers diversified exposure to? I think most importantly is global security. So space and satellites are now very much at the forefront of geopolitics, with the need for sovereignty being something that's increasingly recognized. So we're seeing really in the last handful of years a huge surge in demand from governments for the kind of capabilities that our companies are developing. Second, I've touched on this already, so climate and sustainability. Global scale problems can't be solved without global scale solutions. Space has the unique advantage of being able to look everywhere. I've also touched on space R&D and manufacturing. It may sound like science fiction, but it is becoming a reality, and it's becoming a reality fast. And then further afield, the occasional proverbial moonshot, things like generating solar power in space and beaming it back down to Earth to be able to use with existing solar infrastructure when it's dark or when the sun doesn't shine. So just to put this into a little bit more context, 4 examples of portfolio companies of the trust. So ICEYE, this is our biggest holding and our best performing company historically. They've got the world's largest constellation of satellites that use radars to be able to look at the Earth 24 hours a day, day and night, rain or shine. That's important because most other satellites use cameras like the one in your smartphone that don't work when it's cloudy or dark, which is 65% of the time. So this business, defense is really the key driver of this business, and we're very proud of the role that ICEYE has played in supporting the Ukrainian government in the ongoing conflict that they have with Russia. Next up, Skylo, that's our most recent investment. So what they're doing is enabling to anyone's smartphone the ability to send emergency messages whether you're in coverage or outside of coverage. They've got partnerships with the likes of Verizon and have recently announced a deal with Google to integrate their technology onto Google's flagship handsets. Next up, Satellite Vu. That's a London-based company that is using satellites that have infrared cameras to be able to measure the thermal signature of any building on the planet every single hour. So this is an incredibly valuable data set in a whole range of different areas, including defense and intelligence, industrial monitoring, and indeed in terms of drive towards net zero. And lastly, AST, which is a portfolio company that is now listed, that is now the world's second most valuable satellite company. So this company is putting cell towers into space, enormous structures, nearly as big as a football pitch, that will enable you to connect directly to your smartphone wherever you are at 4 or 5G capability. So where there's no connectivity, being able to avail of them. So they are following fast on the heels of SpaceX in looking to move into what's referred to as the direct-to-cell market of being able to deliver connectivity from space. So just very briefly about SSIT itself, I've touched on the fact that it was the world's first listed space tech fund following oversubscribed IPO in 2021. We currently have just under 25 investments focused on generating capital growth over the long term from a diversified portfolio of the category leaders in the sort of market segments that I have already alluded to. What does the current performance look like? So this is from our latest set of results as at 31st of March 2024. So we have net assets of about 226 million, portfolio of about 200 million, and cash of about 30 million. In terms of performance, you can see here on these charts that over the course of the last 12 to 18 months, we have outperformed most of the indices. Indeed, we were the UK's strongest performing investment trust in the first half of this year, albeit our share price is still trading at a depressed level with a significant discount, which, needless to say, we believe is unjustified. But that discount is in line with other analogous investment trusts that are focused on the growth market. A little bit more insight into our portfolio. So vast majority of the portfolio is private. Most of it is growth stage. So in expectation of becoming public companies or being acquired in the next few years. The biggest segment that we're invested in is what we call platforms. This is the satellite constellations that I've alluded to. And you can see here reasonable geographic distribution around the world. We're pleased that the portfolio has shown positive signs of maturing in recent years. So as our most recent report has indicated, about 60% of the portfolio has now indicated to us that based on their own expectations, they are fully funded. And the portfolio overall is extremely well capitalized, having raised in the course of the last 12 months collectively nearly $1 billion. So last slide here in terms of what are some of our views on the outlook and trends for the sector. Well, I think the first thing is the secular tailwinds that I've referred to, we believe are only going to increase in strength. Unfortunately, that's because we believe that the geopolitical tensions that we see in various hotspots around the world are not going to abate anytime soon. So the challenges around Taiwan, around Ukraine, about the ongoing competition for space supremacy between China and the US. We likewise believe that governments' demands for space in terms of helping to mitigate climate change are likely to increase. We see the application of artificial intelligence to all of this data that's coming from space as being a key area of opportunity. We see this convergence of space networks with terrestrial networks, the kind of things that Skylo and AST are doing, as being a really compelling opportunity. And we expect further announcements from SpaceX, not a portfolio company, around their own constellation and their next generation launcher. And we would anticipate continued appetite from private investors for our companies with expectations of year-on-year record amounts of private investment. And we look forward to hopefully the IPO market for SpaceTech companies and by extension our portfolio reopening in the not too distant future. Thank you very much. I hope you found that interesting and I'm happy to field any questions.
Thank you, Mark. Very interesting, very different, as you say. Have we got some? Oh, we have, right. Okay. Steve, gentleman here, please.
Yes. Sorry. A question I'd like to ask is, if this sector was so rosy in outlook, why hasn't your share price also gone into space in a similar way to the space you're talking about? But I think maybe because it's the security risk, around. You mentioned the equipment that you have in space. Is there not the risk of bad guys getting hold of this equipment or territorial disputes over positioning of these equipment? Is that a risk that is holding back the share price?
Okay, a bit to unpick there. No, I don't believe that consideration in particular is holding back the share price. I'll refer back to some of my earlier comments. Our discount has fairly consistently mirrored that of all of the other growth-orientated listed investment vehicles in the UK. So we're not being treated any differently from anyone else. Clearly, the persistent discounts that is applied to us and others would indicate that the market expects that the NAV of our portfolio is going to fall. Contrary to that, we have shown very consistent NAV over the course of the last 2 years. How have we been able to do that? Because our companies have been very successful in raising new money from external investors, validating the pricing. So we believe that the discount is not justified. In terms of the risks that you alluded to in terms of adversaries potentially looking to interfere with space-based assets, that's actually an enormous opportunity that is one of the key drivers for many of our companies. This ability to deliver resilience to governments through availing of the services of hundreds or thousands of satellites, in contrast to the relatively small number of exquisite government assets they own, is one of the key trends that is really driving demand for many of the services of our portfolio companies.
Hang on.
Can you talk a little bit about, assuming that what you're telling us is broadly true, and these companies that are now, you say, becoming EBITDA positive will ultimately become profitable and presumably will list. What's your exit strategy, or how do you monetize the opportunities? And given you see such a huge opportunity set, you say you had 35 million or so in cash. Are you constrained by the cash you have, or can you just talk generally about how you will return cash and how you'll grow the portfolio?
So the guidance we've given is we don't expect to be issuing dividends. Therefore, where we do have realizations, we would expect to as a rule, reinvest that into the next generation of companies. We do think that, as a generalization, varies from company to company, but we do believe that IPOs are the most likely route of liquidity for most of our companies. Why do we think that? Because there's a very long precedent over multiple decades of best-in-class space tech businesses around the world ultimately becoming sizable public companies. And the sort of businesses we're backing, we believe, have the credentials for that. We've now had 5 portfolio companies that have gone public. This isn't just through SSIT. So there is a reasonable precedent there of companies ultimately becoming public.
And just maybe one last question. Were you shown SpaceX and said no to it? You said you don't hold it, but you see 70% of all deal flow.
So look, what SpaceX has achieved is absolutely phenomenal. The opportunity to invest in SpaceX was really open to us since SSIT launched, during which time, depending on who you talk to, SpaceX has been valued between 100 billion and 200 billion. Let's just say we will look at any particular investment opportunity, look at the potential return that we think we can make, and ultimately, so far, we've decided that we think that there is higher return potential in the other businesses that we have invested in. But that is not to diminish from what SpaceX has achieved. It's purely a reflection on the valuation.
Which one? Yes,
Can you tell me, do you think space junk's going to be a problem?
It already is, but thankfully I've got 3 or 4 portfolio companies that are solving it. So yes, space, although space is infinite, excuse the pun, it is becoming increasingly congested through all of the satellites that have been put up and also the historic debris. And unfortunately, exacerbated by various sort of anti-satellite missile tests that the likes of Russia and China have done in recent years that create debris clouds of thousands of pieces. So how do you go about solving that? Well, firstly, you need to be able to track all of that debris to know where it is. We've got companies like Leo Labs that are using radars on Earth to be able to track pieces of debris as small as a 2-pence piece, 1,000 kilometers up. So you've got to have that fidelity of where it is. And then you've got to have companies that can help remove satellites at the end of their life to get them to burn up in the atmosphere and therefore not be in a debris. And then you also need businesses that are able to capture debris in the future. So those are all areas that we're actually quite active in. So yes, it's a problem. We think that sustainability is something that the space industry as a whole needs to take more responsibility for, and it's something that, as I say, we have a number of investments that are looking to solve those problems.
Geographically, where are you invested? I mean, most of the companies presumably are US, but we do have the Shetland Spaceport in the UK, and I think Japan is quite active in the... they've got one of these junk collecting companies that's listed, haven't they?
Yes, which is so Astroscale is a portfolio company that did go public last quarter. So we are geographically agnostic. We're just looking for the best businesses, wherever they may be, using that information asymmetry that I alluded to. Inevitably, though, where is the bulk of our activity? It's principally in the US and UK and Europe. That accounts for, on an NAV basis, I would say about 90% of current NAV is in those geographies, but we have investments in Japan, we have investments in India, and across the broader portfolio of Seraphim's activities, which is the trust and other elements, we've actually got investments in companies in over 30 different countries.
Okay, there's a gentleman down there with a microphone.
Yes. I happen to work in the space sector, both with NASA and with ESA. And first of all, most of the space junk is not at 1,000 kilometers, it's between 200 and 500 kilometers in space, or what is called LEO, low Earth orbit. Secondly, you say you've invested in American companies. You seem to have missed out a lot of the big ones. Why? Such as, say, Northrop Grumman or Lockheed Martin, and I can name a few more. In Europe, you've missed out Aerospatiale, You've missed out the Italian research in Britain, Inmarsat.
Do you have any private companies that you can identify? Because those are all very large listed companies. Our strategy is focused on private investments.
Reaction Engines is a private company.
I would love to be able to invest in every high potential space business around the world. Unfortunately, we do have to be selective, and ultimately that has led to us not investing in reaction engines.
But
the other names that you've referenced are all...
with the companies I've mentioned, which are obviously stock market companies, would give you a higher return than you're actually producing.
The mandate of our investment trust is to focus on private growth stage businesses, not very large, well-established defence primes, of which there are numerous other ways of getting exposure.
Okay, so you mentioned that you raised £1 billion last year.
The portfolio raised $1 billion.
Yeah,
yes.
okay. As a possible investor, wouldn't that dilute my shareholding? Or how did you raise that cash?
Well, again, it's not us that's raising that. It's our portfolio company. So this is a common facet of any venture fund, and particularly any successful venture fund. Your best businesses, and this is true for space especially because of the capital intensity, very quickly get to the point that they're raising rounds that are potentially larger than your entire fund. So it's simply not possible to be able to provide all of that capital ourselves. How do we mitigate that? We look forensically at the strength of the syndicates that we invest in. So we're sharing that burden of fundraising requirements with our co-investors. What does that mean for our holdings? It does mean that over time, on a select basis, we will have to take some degree of dilution, so reduced percentage ownership. But where those businesses are performing well, the share price increase and the increase in valuation of those companies round to round should more than offset any potential dilution.
Thank you very much. Okay, I've got a question for you. You mentioned about landmark partnerships. What's the deal with Nvidia? What does it look like?
So this is Spire have announced a partnership with Nvidia. So one element of Spire's business is that they are using their satellites to collect high fidelity weather data vertically through the atmosphere all the way up to the ionosphere that you can use to be more powerfully predictive about weather forecasting. So their capabilities mean that in theory you can see with the same accuracy a couple of days into the future. Weather forecasting is one of the most compute-intensive types of predictions out there. So the partnership with Nvidia is really about using Nvidia's latest GPUs and compute capability to power the weather models that Spire has developed utilizing the data that they're collecting from satellites.